Hello, everyone. My name's Dean. Let's talk crypto. This is where you subscribe for daily Bitcoin updates and technical analysis. We track the price of Bitcoin as proxy for the cryptocurrency markets at large. Today is January 23rd, 2023. 1/23/23. Awesome. And a lot of Bitcoin bears, crypto bears, are in disbelief despite the rally not even having done anything yet, right? If you go on the high time frames, we haven't even done that much, okay? We haven't even put in massive gains like, Bitcoin's up 30% for the day or something like that. We haven't done that. We haven't even put up, numbers where you check your altcoin prices and they're up 50% on the day by and large, okay? There are some exceptions, of course, but by and large, the attention-grabbing, face-melting, sort of news headline price action that screams the bull market is here has yet to take place, yet and still a lot of bears are saying, oh, it's too much, too early, too fast, blah, 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 blah. And yeah, they're on the sidelines or they're in shorts. Meanwhile, shorts are being liquidated at an historic rate and the price continues to go up. We continue to consolidate sideways, not down, but sideways, okay? And so today I want to talk about why we're still going up and what to look out for. This is a continuation of what we've been discussing, okay? We're going to rehash the idea that you're most likely seeing the very beginnings of one of the biggest bull markets in cryptocurrency history, okay? And so in this live stream, what I want to do is I want to talk about the claims made by a lot of bears. I've been doing some research, watching some other content producers, right? Analysts, listening to quote-unquote experts, right? Even one guy called himself a master trader. I'll let you guess who that is, or you can Google it. A master trader, right? Wow. In all of this, they're saying, one, the Bitcoin bull market cannot occur in such a macro environment, okay? That's one of the most common sort of bearish narratives that I hear. The Bitcoin or crypto bull market cannot occur in such a bearish macro environment. The economy is not good, the rates are high, right? And so you would expect not just Bitcoin not to be able to go up, but also the stock market not to be able to go up. But if you look at crypto, if you look at stocks in the recent past, that belies that. But what they say to that is, this is a bear market rally, and it's happened in the past. And a lot of times they'll cite in Bitcoin this, which was a bear market rally, okay? You came down, and then you went up, and you made a higher high even. And they say, see, that's exactly what we're getting here. It's a repeat of these bear market rallies, okay? So I'll let you guys decide, what a bear market rally is or isn't. But if you know anything about technical analysis, even the rudiments of Elliott wave analysis, you understand that this indeed was a bear market rally because it was part of a three-wave move, a counter correction. But when you look at this, like you don't just keep putting bear market rallies in. You only put bear market rallies in a bear market. And so this was a correction that is, by definition, a bear market rally. But the other thing they say is, if you look at equities, the S&P, NASDAQ, they don't see the S&P and NASDAQ going too much higher. And so, as a result, by extension, Bitcoin shouldn't either. Okay, so we're going to look at those two main arguments against this going to Valhalla. And, you know, what I've said on this channel is, in this move, do you expect for us to come all the way up here, probably, to make a higher high, right? And then to retest this. Obviously, I don't think it's going to take until June to make that move. But something quick, you know? Something quick, and then a continuation. So you're going to have to work through all of this price action. And that's probably going to take a lot longer than making higher highs and going into what we call price discovery, where there is no resistance and you just keep going and going, and it's going to be, once you break all-time high, it's much easier. There's less friction. There's less friction to continue. But we're going to look at that and why this is a likely move for Bitcoin, okay? Something like this. Boom, boom. Yeah, and then continuation. So yeah, that's what we're gonna look at today, guys. As always, if there are any altcoins you want me to look at, just let me know. Akanksha says, "Holla, what's up? Is there any golden cross on weekly for Bitcoin?" I don't know, Akanksha. I would have to be, I would have to put in my my EMAs. Again, I trade principally on, and I do my analysis principally using price action, you know, using the candles, and then I use indicators corroboratively. So I'm not that strong in terms of like what a death cross is, what a golden cross is. I don't really look at that. But I can tell you this much: when I turn my indicators on, and I use a few indicators, a few EMAs, so exponential moving indicators. I don't use simple moving indicators. I use Fibonacci numbers as my indicators, right? The 21, the 55, the 144, and the 89. You can turn on the 89 as well. But in a sense, what you can see quite simply, whether this is called a golden cross or whatever, is you have bullish crosses here with the EMAs. You're getting them at key points. Okay, so you got the first one, the 21 crosses the blue one, which is the 55 on this chart. So the yellow classic, the yellow is the 21, the blue's the 55. That cross happened right when we crossed the midpoint of this channel, this bear market accumulation channel. Okay, the second cross came where you cross the 21 and the 144. So I don't know what a golden cross is, but I know enough about EMAs in that when a low time frame, or they call it the fast moving. So the lower the time frame, so the 21 is the 21-day exponential moving average, right? 55-day exponential moving average. So we usually say the fast EMA is the smaller one, the lower lower time frame. When a low time frame crosses a higher time frame, that's typically bullish. And so does that count as a golden cross? I don't know. But that to me is bullish. When this 21 crosses a 55, that's really bullish. 21 crosses 144, that's your long or slower, you know, showing the larger trend. And that happened at 20,000, okay? Let's see. Yeah, right under 20,000. That's really, really bullish. That's really, really bullish. Okay, and this is on the daily time frame, mind you. So you have a bunch of nice bullish crosses, EMA crosses on the daily time frame, and if you go on the weekly time frame, you have none yet. Okay, you don't get those until we come up to these areas. Okay, but thus far, you have some nice bullish daily EMA crosses. I hope that answers your question. And Akanksha says, could you see the chart of Harmony 1? Got it. Yeah, it's actually something I'm invested in, so we'll look at that. And what's the highest price for Harmony 1 you see in bull run? Quickly, let me see if I can even give you a price prediction for Harmony 1. If we go look at this chart. Let me turn my EMAs off. Oops. Okay, and we're gonna get into all of this more later in the show, but okay, yeah, for Harmony we can do a quick price prediction. We may be able to. Okay, that's assuming that this is a proper impulse and this is a proper retracement. Really quickly, let's just check if there's any time correlation. Let's see. I would say that wave 5 would end here, okay? But I don't know if this is a corrective or impulsive wave 5. Okay, it could be part of a zigzag, right? So 595 days up. And let's count the... Yeah, I would say... I would say looking at this just straight out... okay, let me try something else. Sorry, let me check something. It is about here. Whatever, that's close enough. Okay, yeah. Yeah, I was right. Yeah. You know what? Okay. So two things. One, I'm looking at this like at first glance, I'm seeing some sort of 5-wave move. But if you look closely, it's not a proper 5-wave move. There's some truncation in this 5th wave, okay? Some truncation there. But nonetheless, I do think that is your 5-wave move with a truncated 5th wave. And then that would mean that your correction goes something like this, okay? A 3-wave move. And if you look at this in terms of, 5 waves up, 3 waves down, typically the 5 waves up, the first 5 waves up are comparable in time with the first 3 waves down, right? So wave 1 and wave 2 are comparable in time and in price, typically. And they should be more or less equal, typically. But there's just a big discrepancy in time. 595 days up, and even if you add the consolidation reversal, you get 420 days down. Because there's very little relationship between these 5 waves up and these 3 waves down, I would say that this all is corrective. This is a larger zigzag move, okay? And another thing is, a normal correction doesn't typically give you that truncation. You typically see in a regular 5-3-5-3-5 extension that's impulsive, that wave 1, and I did this measurement, if you extend wave 1, retracement of wave 2, your wave 5 hits to a minimum of a 2236 Fibonacci extension. You only went as high as the 2. That tells me, those two things tell me that all of this is an A wave that just has, taken the form of a 5-wave structure, which is, part of a zigzag. And this is a B wave that has taken the form of a 3-wave structure. But this isn't pure impulse. Given that this isn't pure impulse, we can't do a kind of a rough prediction. We actually can. Okay, we can still, with this information, project wave 1. Okay, we can. Here's what we can do. We can take 5 waves up and take 3 waves down. And because this is corrective, we can take the 3 waves all the way down to the nominal low. Okay? Right? Not even looking at the orthodox low, the nominal low, which is where we are right here. And then we can project this. This is a really rough estimate, by the way. Project C. So if this is A, this is B. C usually hits between the 1 and the 1236 Fibonacci extension. Typically, okay? Not always, but typically. Sometimes it goes a little even a little higher. This would be my target for Harmony 1 in this coming bull run. Okay, 5 waves up, which would serve as the first impulsive Elliott wave, right, of pure impulse, and that would most likely be targeting within this region, the $1 to $3 to $11.8, something like that. Okay, that's how I would make that projection. Again, it's a very rough projection, but between $3 and 11.8. And if you kind of measured that out, sorry, let me go back to what I was just on. Okay, I guess let's do that again. Sorry, 1 second. I just want to see what kind of percent gain that translates to. Notice that everything that I'm doing here is being done on the logarithmic scale. I've seen people taking other people's money with courses, calling themselves master traders, who do not know when to use the logarithmic scale, who thinks it's just an optional thing. You can run your charts like this, right? It's just, guys, it's 2023. We're getting into the age of Aquarius. Pluto, I think it's Pluto going into Aquarius. Do your own research. That's what that means, astrologically speaking. If you just blindly follow a guru or somebody who thinks they know everything, or you think they know everything, you're gonna screw yourselves. Okay, that translates to about a 15,000% to 60,000% move. Okay, a big variance, but say that it's about anywhere between 150x, right, to a 600x. That's what I'm seeing with Harmony 1. But yeah, I hope you guys understand how I did that analysis, how I made that projection. Again, you're projecting corrective waves, but whatever. All right. What was I talking about? Okay, let's get into the main analysis, which is, right, we want to acknowledge, at least briefly, the narrative that this is a massive fake out, and waiting for the other shoe to drop. You've heard it all. Like, don't get too excited, especially these people that are calling for $9,000, $10,000 Bitcoin. Okay, here's why. So I mentioned 2 points at the outset, right? The larger macroeconomic climate, okay? Something about rates going high, and Bitcoin 14 years ago was invented in a favorable economic climate, and so it's never had to trade in an unfavorable economic climate. All this is so spurious, because you can say Bitcoin's never traded in a year of 2023, who's to say it's going to print any candles? Like, do you understand? It doesn't make sense, logically speaking. It's kind of ridiculous arguments. Like, Bitcoin, started 14 years ago. Who's to say it's going to go another year? That's how silly it sounds. And the whole idea that equities are probably going to go down. Let's look at that. Let's look at that first, okay? And so, if you guys want to really make sense of this, and you are warm on technical analysis, instead of trying to be big brain 200 IQ and saying, sorry, I gotta fix my chart real quick, or my screen. Bring big brain 200 IQ and saying, yeah, parroting all these narratives like, the rates, and we'll see what the Fed says and stuff like that. Just look at the charts. If you have a predilection for charts and technical analysis, and you probably do because you're listening to this, and you're on this channel, maybe you're subscribed, then you understand that instead of trying to figure out all of these moving parts and making these arguments for why this and why not that in your head, you can literally just look at the US dollar currency index, which is a graphical representation of what the Fed does with the US dollar. Okay? Rates going up, all that stuff, it's all baked into this chart. Okay? So you can look at this chart and make a lot of sense about what our financial policy is and what is happening with the economy. Okay? But it's not always going to show up in the jobs report immediately. It's not always going to show up in the stock market immediately. But this is the primary source. Is the dollar strong or is the dollar weak? And we understand, because you're watching this channel, you've probably already seen me talk about, the 8-9 year trend relationship that Bitcoin has to the dollar, the US dollar currency index. The USDXY goes up, Bitcoin goes down, USDXY goes down, Bitcoin goes up. That's proven, that's a fact. Okay? We have almost 10 years of data to prove that. So instead of trying to figure out all these other little small moving parts that, may make financial sense, but, it's kind of like a useless argument. And I'm convinced people like to do this because maybe it makes them feel smarter or makes them feel like they're doing more work. But less is more sometimes. Less is more. You can be more efficient in how you do your analyses, to each his own, but I'm just going to look at the US dollar currency index as a proxy for how the US economy is doing and what the Fed does and all that stuff. I literally all I have to do is look at this one chart and figure out where this chart is trending. And thus far, since September, this chart has been trending down and it doesn't seem to be stopping, okay? If you zoom in to what's happened all recently, okay, we're on the hourly chart now. Whoops, I didn't want to do that. So just zooming in, we can see it's just been consolidation here. Consolidation. But it's bearish consolidation. Why? Because the trend is down. It's kind of like a bear flag, right? You flagpole, you consolidate, and you continue, okay? So that's what it looks like to me. Very simply, if I go on a 4-hourly time frame or a daily time frame, I can turn on my stochastic RSI indicator, my momentum indicator, and my momentum indicator is showing that we're topped out and we're coming down, okay? Topping out in consolidation at the top of a range tells me that you're going to continue to the downside. Really simple, guys. It's not that complicated, okay? So that's the first kind of refutation. Like, oh, Bitcoin can't do this in this macro environment. Like, okay, whatever you say, but the dollar has been going up for about 12 years, and now it just started to come down. So whatever the macro environment is, if the dollar's going down, Bitcoin is going up. And so are stocks, by the way. Not as much as Bitcoin, but they're going up as well. Let's have a quick look at the S&P 500, so the SPX as a proxy for a Bitcoin. Or sorry, for what am I saying? Let's look at the SPX, the S&P 500 as a proxy for markets, for traditional stock markets, okay? And if you're subscribed to the channel, you'll know I've been saying that stocks are going to go up. These equities are going to rally. But this is by definition what you call a bear market rally. So a lot of, I'm sorry, they're amateurs. I don't care how many followers they have. I don't care how much they charge people for their investing courses or what titles they call themselves. But if you can't see that this is not the same as Bitcoin, I'm sorry, you're an amateur chartist. You're an amateur analyst, right? This chart right here, this S&P 500, is clearly in what you would call a bear market rally, okay? So this, let's zoom out. If you guys have never seen this chart, there's a few new subscribers. Maybe you've never seen me analyze traditional markets. Here we go, really quickly. This dotted line chart is quite simply a big trend that has been in place since April of 2010, okay? And that goes back to the beginning of Bitcoin. It was around 2009, 2010. Okay, and ever since then, actually, the dollar has gone up. People have said, oh, Bitcoin was, it was born into a favorable financial market. Yeah, kind of, but not really. If you look at the relationship, again, between Bitcoin and the US dollar, or sorry, what am I saying? I'm not looking at the dollar. I'm looking at the SPX. Oh, shit. Apologies. Let's back up. Rewind for a second. Let me take a drink. Apologies, guys. All right. I got this. The SPX has been going up since 2010. That's what we're looking at, the SPX. And we're using the SPX as a proxy for traditional financial markets, okay? Now, I have this dotted line in because at the end of the day, all you're doing as as a technical analyst is you're looking for patterns, you're looking for trends, and the obvious one that screams at you, if you're looking at this chart, whether you're a Gann analyst or a Wyckoff analyst or an Elliottian, you need to draw this. This is clear resistance, okay? Every time we hit this trend line, we bounce off. Every single time, right? Whoops. Bounce. 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 And what do you expect is going to happen next? Until which point we arrive at this line and consolidate right under the line and then break it, retest it, and then follow through. We're just going to bounce off of it, okay? That's simple support and resistance technical analysis, okay? So it's quite easy actually to trade these traditional markets, or at least the S&P it is, looking at this monthly chart, high time frame, okay? We're in what we would call a bear market rally, and even let's say you don't exactly know the different degrees, the Elliott wave degrees of this progression, you should recognize this being an impulse, a proper 5-wave impulse, and this being an initial break of structure. That's what I've done. I've pretty much said I'm going to ignore all those years of price action because I don't really know, or nor do I have the interest of counting, from the beginning of trading, all the different waves, because I don't really give a damn. All I'm looking at is what's likely to happen now. All right, now that I see this, I see 5 waves up. I see an impulse, right? That was a bull market starting in 2020. Nice big bull market, relatively speaking, right? For traditional markets, all the way up to this trend line. Reach this trend line, put in an initial break of structure, targeting wave 4 of the previous trend. I've seen this movie before, okay? Now what am I looking for? I'm looking for a retest of this line, right? Basically, resistance, if you break support, or if you put in initial break of structure, you want a retest or a counter. So this is that blue wave, that B wave. This is what we're putting in now. We're basically in the impulsive portion of a B wave, okay? And because it's a B wave, I want everybody to understand B waves can look a lot of different ways. Sometimes B waves look like this. Whoops. Sometimes they look like this, right? An A wave, a B wave, and a C wave. Sometimes B waves look like this. Sometimes B waves look like this, right? There's a lot of variance that you can get here because at the end of the day, you're dealing with a corrective wave. So, what I'm trying to say is this. Do expect traditional markets to go up, as they have been for the past few months, okay? Because the DXY is going down, right? The US dollar currency index, the underlying asset, all risk on assets, stocks, cryptos, all of them are going to go up. But do not expect the stock market to go up like Bitcoin does, because they're not in the same realm in terms of what these uptrends look like. This is a bear market rally. In Bitcoin and in cryptos, by and large, you're looking at a proper, clean bull market, right? Not restricted by an upper limit, an upper resistance, okay? Does that make sense? I hope that makes sense. And, you know, a lot of people who think they get exactly how the market works, and they think that basically these traditional markets like the S&P and NASDAQ front run crypto, are basically doing all of their analysis. A lot of these traditional market people, they do their S&P analysis, they do their NASDAQ analysis, they jump into crypto, and they think they got it figured out, and they think it's the same market. They don't want to do more work, so they just copy and paste all of their work that they've done in the S&P, and they see a bear market rally, and they assume by extension that crypto is going to be in a bear market rally as well. They've in their minds made the extension of crypto following and traditional markets leading crypto, you know, for some reason. And so they think that's exactly what's going to happen, but it's not. So do expect, as it matriculates up towards this resistance and maybe even breaks this resistance slightly, right? Throw over, you can get that, no problem. Do expect lots of fits and starts for the stock market. Do expect some variance, okay? It may look ugly. It may be like up and down and up and down and up and down. You can't get a clean, it doesn't seem like you can get a clean move up. It's a corrective uptrend. That's why. Okay? So that is my answer to those who say, you know, the traditional rallies, traditional markets rather, are in a bearish trend, or they're macro bearish. And yeah, I completely agree. Go on the higher time frames. This daily is not even that high of a time frame, okay? Or weekly rather, right? You know, remember when we were looking at the weekly time frame for Bitcoin and cryptos and all that stuff, and you can see that they've been going up? What does it look like here? It's the opposite, right? It's the opposite. You're all the way up on the weekly time frame in overbought territories. You're going to continue to go up a little more, but then you're expecting to come down quite a bunch. And so for people who've called me, I know some you know, family members or anybody that is invested in traditional markets, I tell them it's going to go up for a little bit, but it's very risky. If you're not a chartist, if you're not a professional, if you're not really keen on the charts, like, sell off sooner than later. Because what you're going to see is it's going to come up and then it's going to go down more than it was, further than it was before at the bottoms. So basically it's going to make a lower low. That's what I'm trying to say. And this is the best case scenario. Again, these impulses right here can go down much further. Okay, they can go down much further because again, I didn't read all of this. This could be wave 1, wave 2 situation, or it could be a much bigger correction playing out. Do you understand? Like, it could be something like this playing out, right? So I'm not exactly sure. I don't really care. All I know is that technically speaking, this is a bear market rally, and I just wouldn't even be exposed high time frame in stocks for that reason. You know, I see a few more months of upside, and that's it. Okay. So Akansha says, very bullish on Harmony 1 and Phantom, have my money in both along with ADA. Yeah. Okay, now let's get into what we care about on this channel. Let's get into crypto. Okay, so we talked about the two main reasons people are in disbelief about this rally. The big brain 200 IQ experts are in disbelief. Just to recap, is one, because of the macro bearish environment, the economy sucks and blah blah blah. And how many times do people say, or is it not clear that the stock market is not the economy? Okay, the stock market could be doing one thing and the economy can be doing something completely different. They're not in lockstep. Okay, but again, what we do on this channel is we analyze the economy and financial policy at large through the US dollar currency index, the DXY, the relative strength of the dollar. And if you look at the relative strength of the dollar, it's going down. It's been going up for 12 years and it's finally coming down. It's starting to correct. Okay, so that being said, risk on assets will go up. Okay, and the second reason people say it's not possible Bitcoin, even if it goes up a little bit, is going to come down more, is because they analyze traditional markets, S&P 500 and NASDAQ. They see that it's in a bear rally or bearish rally, right? It's in a bull trap. It's going up only to come down further, right? And they make that assumption of crypto as well, right? Because maybe they're lazy. They haven't spent any time doing deep dives into the cryptocurrency chart, and they think that the S&P front runs cryptocurrency, and so these traditional markets are going to do what the crypto markets will do, and they're going to do exactly what the crypto markets do, and there's no way the crypto markets can outperform the traditional markets. Okay, so those two assumptions are technically disproven rather, if you're careful. Now, why else are we bullish? Why else does it not make sense not to take advantage of this bull rally? All right, here's a really quick example as to why you should be very excited by continued uptrend. I just put a trend line in, right? Again, notice this is a logarithmic chart. And I'm going to repeat this over and over again because I see it so many times. People taking other people's money for crypto advice, for investing advice. They have courses teaching you how to do technical analysis, how to trade, all that stuff. They literally don't know. And then let me add, other technical and analyst technicians. What am I trying to say? Other technicians of the charts, technical analysts who interview them, literally don't say anything, and that drives me crazy because I'm like, is anybody serious here? You cannot represent parabolic growth on a linear chart. Okay? Unless you live in another universe where math is different, it doesn't work. Okay? You cannot represent parabolic growth on a linear chart. Bitcoin has grown parabolically, and if you look at it long enough and you look at it on a linear chart, you're wasting your time because none of those relationships are like, you can draw all your trend lines all you want, right? It's just not a faithful representation of what's going on. This chart, as it's drawn now, as goofy as it seems, I guarantee you, this person in particular, I don't want to disparage anybody, so I'm not going to call out any names, but this master trader prints this on every single channel he does interviews, and nobody calls him out on it. Does nobody know how to use these charts or how to set up these charts correctly? I mean, and that's like a basic tool. So again, what I say, Pluto is coming into Aquarius, whether it is or it isn't. Do your own fucking research. Don't believe everything you hear on the internet, all right? Like, there's a lot of unserious, I won't say frauds, but people who you would be shocked how little they know, though they pretend to know a lot more, and people, I know, around them, say they know a lot. They don't know much. They don't know basics. Be very careful. Be very careful. At the end of the day, it's all on you. You have to do your own research. Don't trust anybody. Trust but verify. Do your own research. I can't stress that enough. Okay, so we're on the logarithmic chart because we're representing parabolic growth on a linear chart. Okay? And there we can get a more accurate representation of what these trends look like. So we can draw this kind of trend line. Okay? And this trend line in particular is really, really compelling. Why is it compelling? Let's go and I don't know why I can't find this. Oh, man. 1 second. Okay, here we go. Okay, so this trend line is a 434-day trend line. Okay, really compelling. Okay, again, when are trend lines compelling? There are two criteria that make a trend line compelling. One, hits on the trend line. You want at least 2 hits, okay? More often than not, you want about 3 hits, 3 or more. But 2, you only need 2 points to make a line, right? You only need 2 points to make a line, right? Boom. So that's basic math, right? We all learned that in grade school. The other thing that makes this compelling is that I'm on the weekly chart, and this is 434 days worth of a trend. So this trend line is important by definition because it's a high time frame move. It's a high time frame trend, okay? Given that I've accurately represented this price action, and this trend line is an accurate representation of this trend, given that I'm looking at Bitcoin's price between 15,000 and 65,000 on a logarithmic chart, right? Then I can trust this line, okay? Do you understand? Like, if I don't put this on log, it's still if I don't put this on log, it kind of does the trick, but it gets skewed. The more variance there is between the prices, meaning if I'm looking at Bitcoin from 0 all the way to 69K, then there's a lot of variance. There's a lot of skewing on this chart, right? But the closer I get, let's say I'm only looking at like Bitcoin in a small range. I don't need to be on the logarithmic scale. But if I'm looking at even 15,000 to 69,000, I need to be on the logarithmic scale to be more accurate, okay? Can't stress that enough. Anyway, let's say we trust this trend line. What do you see here? Very clearly, you just broke it, okay? And you can say, we said that if you look down here, this box, this channel, this falling channel, was our bear market accumulation channel. And so when we were looking at this earlier, we said this was a big deal. Excuse me, that we came up. So we came up through, retested, and continued. That is basically us turning this bear market accumulation channel, so the bear market, essentially, from resistance into support. We RS flipped the bear market. Now, what you're doing with this trend line is you're RS flipping, turning previous resistance into new support. That's what RS flip means in technical analysis. We're RS flipping the downtrend, okay? The downtrend that we started from when Bitcoin was at 69,000 in November of 2021 until today. That trend has broken, okay? This is irrefutable. That's what's so great about technical analysis. Obviously, everything has to be interpreted, but the fact that this trend has been broken to the upside is right there on the charts, okay? That signifies not just an end to the bear market, but the start of a new uptrend, okay? So let's put that back in. And what I want to do, oops, okay, let's just draw that again. I prematurely erased that. So what I want to do now is I want to go into a smaller time frame. So you can see this very clearly on the weekly time frame. Let's go on the daily time frame. And I want to look more carefully what we're doing. Okay? So let's be really as precise as possible and draw this. And you can see right there, we're just taking that resistance, and what do you see has happened on the daily time frame? Let's now zoom in. What do you see has happened? Why is it that we're kind of hanging out? It looks like we're going sideways, and a lot of people on YouTube, a lot of people on Twitter who do technical analysis don't know how to read price action. They are very reliant on indicators. They'll sell you even all kinds of indicators. And at the end of the day, all these indicators are just they're amalgamations, or it's kind of like putting a few primary indicators into a blender and then spitting them out. And those primary indicators are going to be your volume, your EMAs, exponential moving indicators, maybe some MACD, like basic indicators. MACD is one of those secondary or tertiary indicators, but like primary indicators taken, processed, and then they'll tell you bullish or bearish, tell you rising, falling, buy, don't buy, whatever. At the end of the day, price action is primary. It is the main, it's the leading indication of what the market is doing. So please, just some advice, do your own research, but if you're interested in doing technical analysis, you're interested in reading markets, you should take a little time to learn and get comfortable reading price action without indicators. And then you can use indicators corroboratively, or else you're just going to get lost. And I'm going to say why I said that. If you look at this, we broke this resistance, and what have we been doing for the past 1, 2, 3 days? We've basically been dancing on top of this 434-day resistance, okay, that we just turned into support. This is an RS flip, similar to what we did here, right? We came up, we broke that bull or bear market accumulation, right? This purple channel was the accumulation in the bear market. We broke that to the upside, and we danced on the top, okay? Turning old resistance into new support. Every time you break significant resistance or significant support, you have to retest it. Again, this is a principle in technical analysis. It's one of those things that is consistent in a bull trend, in a bear trend. You just know that and you look for it, it makes your life so much easier. There are a few principles, there are not that many. So if you learn them, you really do yourself a favor, understanding how price action works. I'll repeat, every single time you break significant resistance or support, you have to retest it before continuing the trend, okay? Why is the top of this bear market accumulation channel significant? Again, multiple touches, again, because it lasted a while. Look at the bear market accumulation. Started in June for Bitcoin, lasted for 215 days, okay? So that's 215 days of accumulation that you broke to the upside, and you danced on it for a few days, and then you went up. And now you broke that 434-day resistance from the top of Bitcoin's fall from 69 all the way down to 15K or whatever. And now you're dancing on that, okay? And a lot of people with indicators who don't know how to read price action are telling you, oh, okay, this is it. You know, we've gone up too much. It's too much fun. It's too good to be true. I didn't see this, so, I didn't take advantage of this, and so I need it to go down, or, I've been bearish, and I think, this is what they're thinking. Obviously, they're not going to tell you this. I've been bearish, and I've been looking for 9 to 10K Bitcoin, and I've been calling for this, and so that is going to be it. The fact that we've gone sideways, it just shows an exhaustion of trend. there's no way it keeps going up from here. Don't get too excited. I'm a master trader. I love YouTube. I'm a master trader. I'm a master investor. This is going to come down, okay? And obviously, everything is possible, but not everything is probable, okay? So, but when we're looking at this in terms of price action, it doesn't seem like it's going to come down. Why? Because you just broke a 434-day resistance, and now it's very likely that based off of what you can see here for the past 3 days, you're turning it into support. Okay? That's basic price action. But a lot of these big brain 200 IQ master investor types are on their daily time frame. They pull out their indicators, and what do they see? Ooh, bearish divergence. Confirmed. You see bearish divergence. You're going to go down. You're making a higher high here, a lower high here, or however they're reading it. Yeah, they're reading this bearish divergence. And obviously we know divergences don't always play out, but a lot of times they do. But they don't always, and they don't usually in trending markets. But can you read a trending market? If you're beholden to indicators, if you're beholden to, these momentum indicators, then you're trapped. You're either going short or you're taking profit prematurely. Do you understand? This is why it's very important. Price action first, indicator second. I do see this bearish divergence on the daily time frame, but I choose to ignore it because I understand that in a trend, you're going to see what looks to be bearish divergence printing, but then it's going to be erased by a move in the price, okay? Let me give you another example. So let's say I'm a big indicator guy. I look on the daily time frame, I see bearish divergence, okay? And I say, okay, well, it must be also the fact that we're getting divergence, bearish divergence, or my indicator's also telling me to sell on the smaller time frames, but no, it's not. On the 4-hourly time frame, if you can see, we've been in this range, right, on top of this 434-day resistance, turning it into turning it into support. And while we go sideways, the momentum goes down on the 4-hourly time frame. Okay, that tells me it's very likely that we break up and out of this because we've reset the momentum on the small time frame. Do you understand? Again, you can look at the indicators, but I'm not putting too much faith in my indicators in a trending market because I understand that this price action, this move, this impulse breaks most indicators. This is why people are bearish on the small time frames. One, they missed out on the move and they want to find a good entry point. Two, they don't know how to read price action. They're over-reliant on indicators. Hourly time frame. Same thing. The indicators on the stochastic momentum, the momentum indicators, stochastic RSI indicator, has been going up and down and up and down and up and down and up and down while price is going sideways. Okay? This doesn't tell you much, right? When to buy, when to sell. You kind of have to zoom out and understand the larger trend, okay? So we're going to look at the larger trend in a second. Let me take a small break, acknowledge some comments. Amazing videos of the world. Much love to you as well. Conscious says, can you check on Reef? It's the only bag which is at resistance for so long. Will Reef reach $1 this bull cycle? Let's add Reef and look at it in a moment. So let's just add it to our watch list. Oh, we already have it here. So let's just pull it up on this chart, and so we'll remember to look at it. And let's go back. Let's finish this up. Okay, now, so small time frame, what do we expect? Given that we're dancing on top of resistance, okay, I do expect once this is finished, whatever this is, to continue. Now, what is this? That's the question I've asked myself as well, okay? So I go on my 4-hourly time frame, and I actually look and see this as a very favorable wave 2 correction. Okay, if I take this as my wave 1, okay, you see here from the top, the very top, almost to the penny of that bear market accumulation range, I put wave 1, wave 2, wave 3, wave 4, wave 5. I put 5 waves, okay? That's an impulse, a very clean impulse. You know, Elliott wave theory tells us that wave 1 and wave 2 last about the same amount of time. I can see that here. Okay, wave 3 is typically the longest, the fastest, the most impulsive Elliott wave. I see that right there. It went super fast. Wave 4 comes here, and then wave 5 finishes out. Okay, also, I can measure this. Let's just measure this really quickly. Prove it to ourselves. If we take this as, let's take this as wave 1. Okay, and that as wave 2. You can see that you've hit an extension, an extended wave 3. So if this is wave 1, wave 2, wave 3 extended to the 3382, as you can see right here on this Fibonacci extension tool. Typically, wave 3 comes between the 1618 and the 2 Fibonacci extension. But in bull markets, expect extended waves. That's what you're getting. Another sign that this is part and parcel of a larger move up. This is very bullish. You don't get random corrective moves up to extend that wave 3 like that, okay? So you see wave 1, wave 2, wave 3, wave 4, wave 5, okay? So if you take all of this, and actually I want to pull where I want this to be my, I think this is my wave 1, okay? I'm not going to explain too much why that's where the start of wave 1 is and not here. I think that you put in some AB basing here. In any case, what you can see is wave 2 seems to have hit a minimum retracement level, the 382, which is the minimum retracement level for wave 2, okay? Between 382 and 618 is what we should expect for wave 2 retracement. So I see that for this move. And again, that 382 retracement level coincides with the top, more or less, of this 434-day resistance, okay, turning it as support. Now what do you have here? A series of AB bases before the trend continues. That's what I see on the small time frame, all right, in terms of what is Bitcoin doing? Why is it just going sideways all this time? Is it distributing? Is it getting ready to dump? I don't think so, okay? In terms of timing, if we time this move up, looks like it took about 1 day and 20 hours to go up, if my count is correct, okay? Let's just put this in really quickly, something like this. Okay, if it took 1 day and 20 hours, then it should take approximately the same amount of time to correct. And you have, if you look here, the correction thus far, and I think this was the end of the correction, it took about 1 day and 12 hours. So more or less, this all holds. If you looked at this right here as being a zigzag, this is what I'm seeing. We can turn this white. Okay, this is what I'm seeing on the small time frames. Bitcoin just put in a nice 5-wave move up on the small time frames and a 3-wave retracement zigzag down to the minimum 382, which shows to be very bullish because it only did a minimal retracement, and that minimal retracement coincides with the top of this 434-day resistance. That is my small time frame analysis. Okay, now A lot of people are asking, well, what do you make of this, Dean? You seem to be ignoring everything that comes after this C wave. Well, my friends, after every single impulsive move, in order to reverse, you need to put in what we call a consolidation reversal pattern, 2 degrees of AB basing and a pivot. So if you jump down, you should be able to read that 2 degrees of AB basing and a pivot right here, okay? In some way, you should be able to read this as being 1 degree, maybe 2 degrees here, and perhaps a pivot before a move up. I think what you're getting here is consolidation reversal. That is my small time frame read for Bitcoin, okay? Now, if Bitcoin's doing that, very likely the rest of the market is doing that as well, the rest of the crypto markets, okay? We're basically consolidating on top of old resistances, making them support, and putting in consolidation reversals after a retracement. Okay, so that's what I'm seeing for Bitcoin. That's why I'm seeing it. I do expect on the higher time frames, smaller time frames, it doesn't matter what time frame, I still expect a move, a big move up before correction down to this level. Okay, because this is what the chart is showing. Okay, this is what the chart is showing, and it would only make sense if this was a breakout. What are you going to do? You know, we've seen this many times. For my friends who trade patterns and triangles, these breakouts typically take this shape. Breakout, retest, okay? I know a lot of times people wait for the retest of the line, so they're looking for a lower low perhaps, but what I think is likely to happen is that the retest happen of the main resistance. Okay, the main resistance which will have been broken, which is right now around 35k, where this blue band is. Okay, breakout of here, retest of this. A lot of people are going to be sad. A lot of people are going to be tricked because they're expecting a complete retest all the way down here. But I do not think they're going to get it, because I actually don't think that this is corrective, and even if it is corrective, it'll be a zigzag. If this is corrective, it's a zigzag, meaning you're going to get 5 waves up, 3 waves down. You're not going to break the phi ratio. Okay, so let's say just let's just put this in for argument's sake. Let's say you put in some 5 waves, right? I don't know what this would look like. I really don't. Here, let's... Yeah, I really don't know what that wave would look like, to be honest. So I'm not even going to try. All I'm saying is that once you come up, I don't expect... Once you come up here, I don't expect you to break the phi ratio of this move up. Okay? I really don't. I think you're going to get shallow retracements at best because this asset is super bullish. Okay? Alright. That's pretty much it for Bitcoin. Let us go into the altcoins and see what's going on. Okay, same deal here. You can see with Cardano, you're breaking high time frame resistance. Okay, you can take a trend line, right? You're correctly on the logarithmic scale, okay? And you can see that the downtrend since late 2021, September in this case of Cardano, has been broken. Very clear, right? And not only has it been broken, but for Cardano, it's been broken and retested, okay? And that downtrend break and retest coincided with the top of this bear market accumulation. Does that make sense? So it's kind of silly if you know anything about technical analysis to assume that these 500-day, 450-day, or 500-day, whatever, trends that are being broken and retested are not going to continue to the upside. What did we say yesterday, or not yesterday, it's Monday today. What did we say Friday? It's not that important that you broke the trend, right? Because you kind of wicked above and you wicked above here. What's really important, what's really compelling is that when you break significant resistance, you retest and you continue. That retest makes all the difference in the world. Okay, that's what you look for quote unquote confirmation. If there is any confirmation in pattern analysis, it's that. In breakout trading, it's that. It's the retest. You want to see that retest hold. This is exactly what is really compelling about these breakouts here. As you can see that, right? Can you see that clearly? And again, why is this trend line even something we should pay attention to? One, because it's correctly drawn. Look, let me take off the log. This is what you do. This is what, I don't know what percentage, but a lot of prominent YouTube, prominent crypto, prominent traders, master traders will have their chart set up in this way. It's just absolutely mind-numbing. And nobody says anything about it. That's what really gets me. Like, okay, fine, whatever. The guy doesn't know what he's doing. But then, you invite him on all these shows, and people who are supposedly other experts in technical analysis don't say shit that he can't even set his chart up. It just drives me crazy. In any case, don't do that. Please do better. Do your own research. Figure out, you can do research. You can ask ChatGPT. You can ask Google. What is the logarithmic scale? When do you put the logarithmic scale on? How do you use the logarithmic scale? You could probably go on TradingView. There's probably an FAQ for when to use the logarithmic scale. They didn't put this in because for fun. It's not like, oh, do you want to use log? Tomato, tomato. No, it's kind of really important, especially when you're in crypto and you're looking at assets that grow parabolically, okay? That do a lot of gains. Anyway, back to the analysis. As you can see with Cardano, this massive downtrend that has lasted 500 days, no exaggeration, is finally broken. It's finally being broken. It's been broken to the upside, and more importantly, retested as support. Expect growth from here on out. This is what the simple, straightforward technical analysis says. No Elliott wave, no Gann, no crazy, complicated, arcane analysis necessary. Simple support and resistance. You put in your trend lines. That trend line is 1, 2, 3, 4, 5, 6 touches and lasts 500 days. Very reliable trend line. That is the best analysis I can give on a high time frame for this asset. The best analysis sometimes is the simplest. Don't be seduced by all the different, fibs and, somebody pulls out some random Gann square or circular chart. I mean, there's a place for all that stuff. But what it should do, and what should really speak to you as a skeptical student of the charts, we all are, is, does it coincide with a straightforward analysis? Right? Is this corroborated by a straightforward analysis? Is this something I can understand? Just because you don't understand it doesn't mean it's beyond your understanding and it's right. A lot of times, if you don't understand it, it's probably wrong. So trust yourselves. I would say trust yourselves. A lot of this stuff is not to say Gann is bullshit or anything like that, but a lot of it is just, it's not necessary to gain a basic idea or understanding as to what is happening. You should be able to do that quite simply, right? With one trend line, you should be able to tell, okay, when is this bear market over? Here, this is for Algorand, all right? We drew one trend line, log scale on the daily time frame, all right? Similarly, I have 1, 2, 3. Again, notice you broke the trend line here in October, but what did you fail to do? Retest it. So this is what you call a fake out, okay? You broke the trend line, but you didn't retest it, so you came back down. This is different. You broke the trend line and you retested it, okay? So you have 1, 2, 3, 4 touches, a break and a retest, and this trend has lasted. Oh crap! Wrong tool. There we go. And you guys can do this yourselves. I love that. 377 days. In fact, please do this on your own. Prove it to yourselves. Don't take my word for it. If it doesn't make sense to you, then figure out why it doesn't make sense. Maybe I'm full of shit, or maybe there's something you misunderstand, or maybe your charts are set up completely wrong. But to be successful as an investor, you have to be able to do basic analysis. Or else you just got lucky. Or you got lucky by listening to the right person. Do you understand? We're going to pass Boink. I love Bonk. Bonk. I keep calling it Boink. Bonk is my favorite meme token. My favorite meme coin. I think it's going to do great things. Not financial advice. But yeah, I'm excited about this. I have a really good feeling about it. The technicals look good. There's not much to go off of, obviously, because it's a new token. But I think it's going to do great things in the bull market. I like the project. I like the fundamentals, all that stuff. I've said that before. In any case, I'm not like telling you guys this so you guys can all buy, all 3 of you can buy and I just sell. No, that's not what I'm saying. I don't care what you buy, what you don't buy. Here. Dent. Look at this. This is why chart after chart is telling you the same thing. Technical analysis, the charts tell a story. And, it's up to you. Can you interpret that story? Can you read that story? You have 1, 2, 3, 4 touches. See here? You broke out right here, right? Dent broke out on late December, but it didn't retest. So that is the definition of a fake out. But here, if you can see that, it's really small. Let's zoom in. What's really significant, compelling about this, you broke both the bear market accumulation as designated by this purple range and the 400-day, 500-day, whatever it is, resistance. You broke it and you retested it. And you actually retested it with this running flat correction like that. Awesome. Expect to go up. You just haven't seen it yet. Guys, when this goes, you will see hundreds of percent per day. That's what the charts are showing. When it goes, you will see hundreds of percent per day, very likely. That's when everybody's going to be like, oh my God, oh my God, oh my God. I guess this is a bull run, right? But you don't need all of that. If you can read a chart, you can see all of that coming. Here, again, touch here, touch here, touch here, touch here, touch here, breakout retest. That is what you look at. That's what you look for. That is actually the perfect entry if you're really cautious, conservative trader. You want to see the breakout and you want to see the retest. That's it. It's that simple. Dogecoin. Again, you take a trend line. Nothing else required. You don't need to, be big brain, 200 IQ. What's the Fed going to say? All that stuff. Like, you don't need all that. Just look at the charts. That's why you do technical analysis. Or else what's the point? What's the point? if you're going to watch C-SPAN all day and wait for some old white guys to tell you what percentage the rates are. Okay, you break out here, doesn't retest, but actually you come back and you retest multiple times. Okay, you can expect a breakout here because not only do you retest this high time frame diagonal resistance as support, but then you also retest this bear market accumulation, as you can see right here. The top resistance of this bear market accumulation channel was retest. 2 retests right here. That's a perfect entry. Not financial advice. Do your own fucking research. Ethereum, same thing. I mean, you could do this for pretty much any altcoin. Do you see? We're not like cherry picking and showing you like one example. It's just example after example after example. 1, 2, 3, breakout, retest, continuation. It's beautiful. It's legit. Yes, this move up is legit. Not because I said so, but because the charts say so. Simple, straightforward technical analysis says so. Okay? And you can see it. Do it on your own time. Prove it to yourselves. Whatever you're invested in, pull up the chart. It's free. Go on tradingview.com. Pull up the chart. Do the analysis. Pull out the trend line tool and look how many times it touched, and then that it broke out, retested, and you have your answers. Is this trend real? Is this bull pump real? Is it reliable? Is it going to break up or break down? Right here with RSR, what are you seeing? This is yet to break the trend. So what do you think is going to happen next with this one, RSR? Well, if everything else sort of stays the same, not only are you going to break out of this midpoint, do you see this blue dotted line? It's the midpoint of this channel, and we know in a channel, the bottom is support, the top is resistance. The midpoint is resistance when you're below it, support when you're above it. You're going to break out of this midpoint. And not only are you going to break out of this midpoint, you're going to retest it as support. But not only are you going to retest the midpoint as support, you're going to break out of this 400 or 500 day resistance and retest it as support before continuing to the upside. Okay? It's quite clear. It's quite clear what's happening. We can go on and on and on. Shall we go on? Let's just go a little faster because I think you guys get the point. All right, SHIB, synthetics. This analysis is consistent. Look at that. That retest. That's the most compelling part of the breakout. The retest. I hope you guys see this. Here, I've already drawn it with this triangle. 600 days worth of consolidation. Breakout, retest. All right? The top of the triangle, the top, what would you call this? Is that the hypotenuse? That's what it is, right? The hypotenuse of the triangle would be your top resistance. That's Tron, by the way. XRP, same deal. I mean, this is not what everybody does, and I'll tell you why. To do this, you have to have a few skills in technical analysis, and everybody can draw this line, but not everybody's going to trade this line because not everybody has enough experience or enough belief and understanding to know how powerful this line is. Like, I can show this line to 1 million people, but it's not going to mean anything to them if there's nothing behind it, if they don't have the experience of seeing support and resistance, trend lines that last hundreds of days being respected, and RS flips being respected and playing out, right? Do you understand? So all of this is a direct result of your experience and your understanding. Even if I show you the line and what it does, you're not going to trade it, and it's not going to make sense unless it makes sense. Does that make sense? For me, this is like, oh, okay, I get it. Okay, so I'm gonna build all my positions here, and with no fear, with complete confidence. Obviously, I'm gonna practice good risk management. I'm gonna have some stop losses and stuff like that, but I'm good. I'm just gonna let this play out, and this will be the. Whoops. 1 second. Okay, there we go. I'm frozen. And this will be the move, okay? But a lot of people, they're going to want to wait for that first this or that. You know, they're probably going to want to wait for a move like this before getting in, and then say, okay, now maybe because it's made a higher high, okay? A lot of people are going to do that, and that's fine too. But you don't have to, because the evidence on a daily time frame with this trend line being so reliable is compelling. It's very compelling. And it's possible, it's always possible that the market does whatever, but it's highly probable that move to the upside, the breakout, continue. Okay? Here's Zilliqa. You can see it. I basically drew the channel for the entire drawdown. Okay, and you can see a breakout retest of the top. Okay. V-chain, same. It's still at the midpoint, but what you can see is a retest of the midpoint just happened. So expect for us to come all the way to the top of the channel. Theta, same thing. We're making our way to the top of the channel. Okay, we already broke out, retested the midline. We're gonna make our way to the top of the channel and then break out, retest, and then continue. Telcoin, same thing. We're actually now just testing the top of this channel. The big moves don't happen until we break, retest, and break. Okay, a lot of people are gonna say, oh, how can it be a bull market? Because, you know, typically in a bull market, these small cap altcoins move 100, 200, 300% a day. Yeah, that's true. That's coming. That comes after the big resistances, right, of 400, 500, 600 days are broken, retested, and break out. That's when you see your 100%, 200, 300% moves in a day. Okay? Matic, you see it's at the top of that resistance, right? And if you wanted to, you could do the same thing here. And actually what you saw with Matic here is it retested this trend line all the way over here and then went sideways. It's kind of gone sideways for quite some time. Now just broke out, and now it's looking to break out of this accumulation channel. Okay, DYDX, same thing. Just prove it to yourselves. Do the analysis. Don't trust anybody blindly. Just you know, take some inspiration, listen to people's ideas, put them into practice, try and figure it out for yourself. Maybe you'll see that it's bullshit. You'll see that it doesn't make sense, or you see that it does make sense, and make it your own. If you don't make it your own, you won't be able to trade real money, your own money, off of it. I guarantee. It'll just be somebody else's idea, no matter how good it sounds. It's somebody else's idea. It's not your own unless you make it your own. Okay? So yeah, this is what we're seeing here throughout the market. We looked at Harmony already on the high time frame. Moon River. Here, I would say it's been going sideways. It broke and retested all the way back in November. Went up, down, up, and it's looking to break out of this this downwards facing, or this this downward sloping accumulation channel. But yeah, you can see this happen throughout. And this one's the last one on my my investment list. I think, I don't know how many I have. But anyway, self key. Yeah, you can see it. It's retested the midline. It's gonna make its way up to the top. Breakout retest and follow through. Okay, now let's do reef for Akanksha. Same thing, really simple. Let's go on the daily time frame. And the whole purpose of this channel is educational, i.e., you know, I'm sharing ideas that have worked for me, ideas that I've learned in technical analysis and trading and all that stuff. And, you know, you got to do your own research, make it your own. You know, you hear the concept here, research it, look it up, practice it, and integrate it into your trading, or not, right? But, you know, make it your own is essentially what I'm trying to say. So again, go on the daily time frame. You're looking at reef. You see 1, 2, 3 touches, right? You do have a breakout. You do have a retest, a consolidation, and now a breakout. Okay, so you have all the elements that you're looking for in this continuation, right? So you can also draw a consolidation channel here. But essentially what you have is a breakout of this high time frame downtrend that has lasted 420 days, 423 days. So you broke out, you retested your level, you went sideways, expect to go up, break, retest the top of that consolidation channel, and break out. Okay, so that's what I see with reef. So yeah, that's pretty much it. Guys, I hope that was helpful. I hope that was useful. Do expect altcoins to start running against Bitcoin. So meaning they're both going to run, but they're going to run more than Bitcoin. As we saw with this Bitcoin dominance chart, you do have a bear flag here, and it seems to be playing out. You have your sideways accumulation. Should come down here. You can see that here in your momentum indicator, right? Do expect continuation to the downside here. And Bitcoin is going up and down in this region, remember, because it is doing consolidation. But I think it's already finished its actual correction, and it's just preparing to move up post AB basing. So I think this was your three-wave move here, and then all of this AB basing. Do expect that move up. When it comes, it's gonna come, and it's gonna be quick. These moves are quick. The consolidations take time, but the moves themselves are quick. Okay, what you want to do is you want to make your decisions during the consolidations. Either get involved during the consolidations, or divest yourselves of your positions during the consolidations. Either buy or sell during the consolidations, not during the breakouts, because the breakouts are volatile. Okay, so that's pretty much it, guys. Again, have a great day, and I'll see you guys tomorrow. Bye.